Hello YouTube and welcome back to YFP, your final piece in your trading journey. Now in today's video we're going to be going over daily lows and daily highs and how we can use this for our reversal model. Now just before we get into the video, I just want to say that I have created a Discord wherein there's a free community and there's loads of free content there. So feel free to join it and familiarize yourself with the concepts that I'm teaching here. They're just basic or videos, just short 5-minute clips of how an order block works, for example. And yeah, just familiarize yourself with the concepts and it will sort of help you digest the rest of the content going forward. Now, to start this video, we're obviously going to be looking at the daily lows and the daily highs, as you can already see. Now, to get into this, what I want to explain first is that if you want to grab a pen and paper, because this is really important tip to jot down. So if we are bullish, we're looking for our previous daily lows to be taken out and then to distribute price higher, and vice versa for the bearish side. So if we are bearish, we're looking for our previous daily highs to be taken out and to distribute lower. Okay, now just to depict this quickly for you in a diagram, you can see here to the right that we have a low to a higher low and to a higher high, and then you can see price hunts the higher low into a demand region that usually has the previous daily low or the previous daily high would have already tapped into that demand region usually, and it will leave that liquidity for the inducement that will take price higher in the future, and the vice versa for the bearish side. So when we're looking at this, we obviously have a high to a low, lower high, lower low. Price has hunted the lower high into the previous supply zone that already had a tap into it, and then continued the price flow to distribute price lower. Okay, so looking at this now, we can obviously see from the last video that I've explained that we are bullish internally within this range until price obviously mitigates a premium array within this range of price, right? Now, in terms of catching these trades, it's quite simple. So what we will be looking at is a zone that has already had a mitigation and delivered a high or a low from it. Now, what does that mean? So if we're looking at this first example here, right? So price has obviously created this OB that has taken out liquidity to the left. So we've taken out this low to the left. That's why it's an OB for me. And then we've obviously shifted to higher prices. So we've shown that we have a buy shift in the market also. So now if we took that last sell to buy candle that I've marked out here, so the sell to buy, we can see that price had already tapped into it right here, right? Now, in terms of the next time that price broke, so the validation didn't come from here. So we're not actually classing this as the first tap into a valid demand pool. Why? Because we have no confirmation of it being a demand. We are waiting for actual structure to shift within the internal trend to start giving us those probabilities to start stacking in our favor for the trade. Now, when we're looking at this now, so we've taken out this high, right? So we've taken out the high, and basically from that we can start assessing that we've had a buy shift in the market. So therefore we need to start assessing where the demand pool is. So this is the demand level, and we can see that we tap into it and get a very nice reaction to go higher, right? Then the next day we have this pullback, right? And this is obviously news based as it came out at 1:30, so it could be CPI, it could be FOMC, etc., etc. It doesn't matter. It's regardless. This will still work even in news environments and volatile environments when news comes out. So as you can see here, this was the first tap that delivered a new high from the actual buy shift that occurred in the market, right? So we'll be waiting for this first tap into the demand zone to be taken out before actually entering our position. As you can see, price aggressively wicks into the POI and aggressively comes out of it to deliver higher prices, right? Now, let's move on to the second example, and I'll show you the exact same thing, however, in a different perspective. Now, again, we have our sell to buy that broke internal structure, okay? Now we have pulled back into it, and this is the first tap into the demand zone, okay? Now from this demand zone, we can see that price pushed higher, and then during the London session, we we liquidated the previous daily low, which is the first tap inside of that demand, to then again deliver higher prices. Okay, so I hope this is all making sense to you guys in terms of the first tap. Now, it's really important to identify these first taps, is because if you think about it, this is where a lot of early buyers or early sellers, depending on what, if we're looking at the previous daily low or high. So in this scenario, we're looking at the previous daily low. So we're talking about early buys in the market. So when there's early buyers that are entering here, you can imagine that if you are a novice trader and you've traded for, let's just say, I don't know, a year or two even, you may be inclined to take these moves. And don't get me wrong, 28 pips is enough to make money from the markets. You know, you don't have to be greedier than that. However, from experience, I used to enter these moves on the first tap, even on the lower time frame. So even on M1, these same concepts will apply in terms of your entry model. You will always be waiting for the first tap to be taken out before you actually enter the market. And the reason for being is due to the fact that there's so much orders and stop loss resting below this. When price actually hunts that, or within a POI, it actually makes the POI much more liquid, which means it has a high probability chance of delivering a new high. Okay, so let's move on to the sell examples now then. So in terms of the sell examples, we can see here, there's another one just before that. Let's actually go to this one just before. Okay, so now we are obviously tapped into this this demand at the low, and obviously price has rallied into another area of supply. Now, why is this area starting to get valid, and why would you start being inclined to take in shorts from this area? Simply because of the fact that from the pullback, from the retracement, as I said in the beginning of the video, we'll be seeking out a premium array within price, right? As you can see, this aligns above 50%, so above the equilibrium of the range, and it's in a premium. Therefore, it makes sense to start looking for sell positions. Okay, so when we're looking at this price, what can you see? You can see an OB that took out a low to the left. It comes back in. However, this high doesn't go on to break this low, right? It was this high that went on to break these lows. So this would be essentially your previous daily high that you're obviously looking to intend to catch that move, and it would be the first tap within. So even if you did have this as your first tap, which it is, still you could still have that, it's nothing wrong by that. However, for the purpose of this video, this is not this day's daily high, right? The daily high is here, okay? And this day, so on Tuesday the 2nd of January, this is the daily high that's in the that we're looking for our reversal from. This would be our internal range liquidity first tap that is still inside of this OB, okay? Now, it was quite a deep mitigation here, don't get me wrong. However, it was still a very nice day, as you could have caught the buys and the low of the day, and you could have tracked price at the high of the day also, okay? And yeah, it's still a 100 pip move, yeah? Cool. So moving on now to the fourth example. We can see here that price tapped into to the left. We have this clear imbalance. If we go higher on a half an hour or hour, we can see it there. And on the hourly, we can see a very nice FVG fair value gap here. And price essentially tapped into it, delivered a low because it broke this internal structure. However, as I said, this is the first tap inside of supply. So what are we doing again? We are waiting for the exact same protocol. We're waiting for the first tap to be liquidated before entering our trade. And you can see we gave a very nice reaction in London session for just pip count. So from this high here, yeah, we're talking a nice 65 pips, which is not bad for a session, you know. And then the same thing, when you combine all of my concepts together, it will become a lot more easier, as you have to be very naive and very novice to not take partials from this leg, you know. you have to understand that if you're in a position, your risk management has to be on point in terms of taking partials, in terms of your desired risk. Now, for each one of these different models that I'm explaining to you, I have a different risk appetite for them. So for these daily lows and daily highs, I tend to risk 1% on these trades, as I know they hold the most weight in terms of probability. In terms of our internal range liquidity, I will drop that risk down to 0.5 to 0.25, depending on the time, the setup, the confluences, etc. But it will go in a systematic order like that, so that I know that I'm rating and classing my probabilities from a low probability setup to a high probability setup. And when there's no point, to be honest with you, to take a low probability setup, I'm generally waiting, especially if I'm starting a challenge, for example, or I'm trading a funded account and it's my first series of trades. I will only look for these previous daily lows and highs to be taken out with a first tap within a demand or a supply region, and then to distribute lower or higher depending on the nature and the narrative of the market. Now, in terms of the risk management side of things, right? So I'm going to make a complete separate video in the free community in my Discord on risk management and how I manage trades for challenges for the funded accounts. So obviously join the free Discord. The link will be in the description. So just join that and watch the videos throughout the free Discord. You can also request videos on the Discord of what you want to see on YouTube and what you want to see me explain, and just give me some feedback, guys. Any feedback is valid to me. I'm always looking to improve my craft, whether it's teaching, whether it's trading, so it's appreciated either way. Okay, now as always, guys, I'll catch you in the next video, and I hope this leads you one piece closer to your last puzzle in trading. Peace out.